Hi, so the Nabo Africa Fixed Income Fund and the Nabo Africa Money Market Fund, which we invest in US dollars, is a critical part of your portfolio. And I'm here to tell you what do we do with these portfolios from one, an optimization perspective, and number two, a risk management perspective. My name is Teddey Muthoka, a CX Analyst here at Nabo Capital. So, one of the things you need to understand about the role of a fund manager is we employ various strategies when it comes to managing investment portfolios. The reason as to why you will choose a fund manager and not just any other institution to invest for your funds is because of this simple fact. Number one, we employ something that we call an active portfolio management strategy. What does that mean? Before I get to that, you need to understand these two things. Number one, passive investing, and two, active investing. What's the difference? Passive investing is whereby, say for you as an individual or an institution, you just get to imitate or follow an investment strategy that other investors are using. Say for example, you have an index fund. What's an index fund? An index fund is a fund that follows the performance of another pre-existing fund that is managed by a professional investor or a professional investment company. So with a passive investment strategy, you just imitate what this fund is doing and it generates returns for you. On the other hand, we have an active investment strategy. What does this mean? This is where we now get to invest in various asset classes, in various securities over specific periods of time. How this looks like is we get to sit down with this portfolio and we look at it and we say, these securities are doing well, this security is not doing well, this is how this security fits into this investment strategy, and this security does not fit into this investment strategy. What's the aim of active investing? Number one, you need to remember that's where the value of a fund manager comes in. We have the ability to focus each and every day on the performance of these securities and know that this is doing well and this is not doing well. What that aims to do is to ensure that we generate alpha returns. You might be asking yourself, what does that mean? An alpha return basically means this is a return that is above the market rate. All right. So if you're to invest by yourself, there's a rate that you will get. But a fund manager employs their skills and their tools to ensure that generate a return that's above the market. So how this reflects in our USD funds is that our portfolio managers, our analysts and our associates, they will sit down, they will research and they will analyze these securities and they will look at which securities will be the best fit for this portfolio. So once that is done, they get to assess, they get to analyze, and now they get to invest it into the various markets that will be able to generate these returns for us. That's a good thing, because what that does to you now is that you don't need to sit down and keep on asking yourself the question, now will this security yield? Will this security work best? Will this fit my portfolio well? Will this drag the returns on my portfolio? That's the problem of a fund manager, and that's what we aim to do with these portfolios. All right, so I've spoken about active portfolio management. The second thing that I want you to consider as well is something we call fundamental research. So the thing with the US dollar is that, remember, this is not a local currency. This is a currency that is used across the world. And some of the things that you need to know is that anything that affects the dollar will most definitely affect the security. So when it comes to fundamental research, there are various things we get to look at. And from a dollar investing perspective, you get to look at how's the country in which the dollar resides, that being the United States. How's that country like? What is going on? From an investment perspective, from an economical perspective, from a political perspective, we factor in all those risks because we know that it affects how the dollar movements will happen in the economy. Second thing that you need to know as well with regards to the dollar investment is that when it comes not to the fundamental research, in this basket of funds, with this basket of assets that we have that we call the money market or the fixed income fund, we have various assets within those funds. All right. And the thing that a fund manager will get to do is that they will sit down on a day-to-day basis and they will analyze security by security, security by security, and they will get to assess how is this fixed deposit performing? How is this company that's providing this fixed deposit, which is a bank, performing? All right. How are they managing their cash flows? How are they managing their debts? How are they managing the loans that they've given out to clients? All right, so we get to assess those various components, and we know that investing in this particular asset will generate a return, a high return that has a lower risk, because that's the aim. As it's commonly known and as people commonly say, which is high risk, high return, the aim now of the fund manager is to ensure that we have high returns but with the lowest amount of risk possible. All right, so I hope you've learned something over there with regards to that. So with regards to fundamental company research as well, if there are any other assets that we want to invest in, say from a debt perspective, so let's say we have government debt or we have corporate debt. From a government debt perspective, what we will get to look at is how the fundamentals of this economy, what's the GDP like? What's their debt to GDP like? How is their GDP per capita looking like? And how will they be able to get to generate revenues and expenditures in which will provide a stability and to that particular economy? When it comes to the company and the company is offering a debt opportunity to invest in US dollars, we will get to assess and get to look at, so how's the company's fundamentals? How are they managing their cash flows? How's their revenue looking like? All right? How their costs look like? Okay, and once we have all this in perspective, now we sit down together with the committee, and the committee will decide and say that this is a viable investment for this particular fund. What does that mean for you? Especially now for me, who's coming to present the customer experience side of it. Well, I just want to tell you something. Customer experience is not just about picking phone calls and making you feel nice. It's more than that, but that's a crucial and integral element which ensures your well-being as our client. But the other thing you need to understand about customer experience is that you getting the best return with the least amount of risk out of that portfolio is also a part of your customer experience. I mean, ask yourself, if you knew that you're investing in this fund, say for example, $100,000, but you're constantly sitting each and every day asking yourself, will I lose this money? That's not the great experience. So the two concepts that I've explained to you, that being active portfolio management and two, fundamental research, ensure that we focus on this main goal, which is maximizing returns and minimizing risk. All right? So that's all about optimizing returns on this particular portfolio. But there's also another side to it. Where there's risk, there's definitely return. And where there's return, there's definitely risk. So what do we do when it comes to managing risk? There are two things that you need to know that we get to employ on a day-to-day basis, and it's all about regulatory compliance. So for any fund manager, what we get to do each and every time is, especially internally, we have various risk matrices that we get to employ on these specific portfolios. One of them being we get to assess the value at risk of this particular portfolio. What this means is what's the maximum that we might expect to lose in the event this security or this investment goes sour. So we get to factor that in. We get to track that on a day-to-day basis, and we get to ensure that it is not above the required limits of a fund manager. Number two, we also look at other various risk matrices, and we get to analyze and say we look at the security, and we know that, say for example, this particular security, it looks like yes, it's generating a very high return, but when we gauge it against other factors that contribute to the performance of the security, that being, for example, what's going on in the economy, you will get to realize that, we need to slow it down, maybe we need to sell. Maybe we need to look for a different strategy to ensure that we do not get to realize the risk on that particular security. Sounds good, right? So it's something to definitely think about and consider. Because remember, at the end of the day, any form of investment has a risk component to it and a risk reward to it. And remember what I told you earlier, customer experience, again, is all about you getting the best returns in the market with the least amount of risk possible. All right. The final thing that you need to know with regards to risk and compliance as well is we have regulators in this market. So other players that probably you may not know of are, number one, we have a custodian, two, we have a trustee, three, we have a regulator. All right. So the custodian is the one who's the custodian of your funds. When you send your hard-earned dollars to us, they don't come to us directly, they go to a custodian who's mandated to ensure that they invest those funds prudently on our behalf and on your behalf. Two, we have a trustee. What does a trustee do? The trustee ensures that your interests as a clients are well met by the fund manager's desires and the fund manager's strategies. right? So the trustee will ensure that we get to invest the funds correctly as per the prescribed limits by the regulator. And that leads me now to the next point, which is, so who's the regulator? So the regulator now here in this case is the Capital Markets Authority. And what do? They do a couple of things, but the main thing they do for us as a fund manager is they prescribe the limits to which these funds are allowed to invest in. So say, for example, in a basket of this particular fund, say, for example, the money market fund, we have various assets. Some of the assets we have are call deposits, we have fixed deposits, all right? We have listed securities, we have unlisted securities, we have offshore securities as well, amongst others. All right. So what the fund manager will do is that the regulator, in this case, who's now the Capital Markets Authority, will provide specific guidelines that say, for example, on this fixed deposit, you have no limit, you can invest all your funds in it, but ensuring that you do not invest, say, for example, 25% of your assets into one particular security within that asset class. I hope that's clear. All right, so that's one of the things they will consider. And also when it comes to the specific asset class, as I've said, there's also that what you call the single issuer limit. So the single issuer limit ensures that you do not overinvest into a particular issuer, so that in the event that there is a downturn of that particular security, you will not get to lose your funds. So that's what happens on the compliance part. So the main aim, once again, of the US dollar fixed income fund and the US dollar money market fund is to ensure that you get access, number one, to dollar-denominated assets. For you to say that you will go, let's say, for example, and look for some of the securities, it's a bit pricey. And let me just be honest with you, you may not have all this much amount of money to go and buy this particular asset. Two, remember that for you as an investor, you may not have the capability to manage all these various portfolios on a day-to-day basis. It is hard, it is tough, it requires a specific skill set, and maybe that may not be your particular area of focus, and that's where the fund manager comes in. Three, we want to ensure that the assets on these funds really meet your needs, and your needs even from a return perspective and also from an inward client perspective. You want to be certain that I am safe, that my funds are safe, and that they're being prudently invested. All right, so I want to give you that challenge. Ask yourself, how much of your portfolio right now is in the fixed income US dollar or in the fixed income money market fund? Because it is a crucial element that you need. In the event the dollar strengthens and the Kenya shilling weakens, it's only those who have dollars that will be able to profit from that. All right, so mine is to encourage you, take the leap, start. So once again, my name is Teddey Muthoka, a CX Analyst here at Nabo Capital. I hope that has been an educational video for you. And if that's the case, please subscribe to our YouTube channel, follow us on our social media platforms. Find us on TikTok, find us on Instagram, find us on X. And remember, we're here for two things. Number one, help you think and reason like an investor. And number two, which is the most important, drum rolls, we're here to make you wealthy. So thank you and see you in the next video.